Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you. Busy Friday morning. I know we always say that, but some days are busier than others, and today is jammed. We have earnings, of course. We have Trump's tweet that rocked the market yesterday. We have Carl Icahn taking a position in Cloudera. We have the jobs number. So a lot on our plate today. Our guest at 8:35 will be joined by Michelle Krebs, executive analyst at Cox Automotive, to break down the autos for us. That'll be at 8:35. In the meantime, Joel, what's happening here in the overnight session?
Continued red on the screen here, Spencer. S&P futures are trading down 10.5 handles at 29.4150. Your pre-market low comes in at 29.3350. I'm looking for this June 28th low, 29.30, before we get another major leg down. On the upside, we got an easy number for you on the upside, folks. Your close was 29.52. Your pre-market high, 29.52. So there you go. There's the key to the upside. It gets really thin above that for resistance. So we'll see what the jobs number can do. Crude rebounding from one of its worst days in years, up $1.34, 55.29. We're going to talk about crude. We're going to talk about the oil companies. We're going to talk about their debt and potential impact on the banks. Gold being a safe haven this morning, up 16.90 at 14.49.30. Looking at this thing, man, if this thing can get over 1,500, you're talking about a major breakout. Silver rebounds too. That's up 1.5 cents at 16.19.5. And let me see if there was any flight to quality in Bitcoin here, as we like to watch the Bitcoin futures. Yeah, held 10,000, up a couple $100 here at 10,650. Triple D, how you doing this morning?
Just looking with the head on a swivel here. So many movers, so much action.
Do you mind if I tell our listeners that you actually traded intraday yesterday?
I know I don't usually trade right in the middle of the day there, but I think everybody knows that I like trading the open, right after the open, the close, right after the close, pre-market after hours, middle of the day, like 2 o'clock, 1 o'clock. I don't usually trade those hours.
What'd you do yesterday?
There was there was fireworks. So you got to get in there and you got to get down and dirty. So I did. I traded a little bit intraday there yesterday. You still got your SPY short on, or your S&P futures short?
Yeah, I do.
Joel with the call. He's short these S&P futures.
Yeah, just a little tad. And you know the old lesson when, you have multiple contracts on and you hold the last few, and that's what you make the most profit on?
That's always the way, eh?
Yeah. So I don't know. I'm gonna try and forget about this one, and use a huge stop on it now that I got a lead. But you know what? It was, I don't want to say if it was luck or timing, but El Presidente, he's the one that did it. I mean, that would be a losing position, I think, if he wouldn't have tweeted yesterday. So we gotta cover that.
And just to be lucky, buddy.
Yeah, okay. But Spencer, and let's just talk about that tweet, the timing of it, where the market was, and now the impact.
All right, so 1:26 p.m. Eastern time. Where were you? That's the moment that everything you thought you knew about yesterday's market went out the window, because that is when Trump tweeted. It was a 4-tweet chain, or maybe a 5-tweet chain, and the money shot came at 1:26 during the talks. The U.S. will start on September 1st, putting a small additional tariff at 10% on the remaining $300 billion of goods and products coming from China into our country. This does not include the $250 billion already tariffed at 25%. So that's the money shot at 1:26 yesterday.
Trade war back on. And this obviously, all the gains yesterday just evaporated in a matter of minutes. And that was an impressive sell-off. I mean, it was straight down. Like, look at that SPY chart. Intraday, 300 and roughly 300.5 when the tweet comes out. We fall to 298 in a matter of about 2 to 3 minutes, and then we just continue to fall. We finally do bounce at the prior day's low. I traded off that bounce. I was like, okay, we've been straight down. I'm like, I'm going to trade off this low. So I bought SPY right around that low. I think it was like 298.30 or something. No, I got my handles wrong. Handleitis here. 295.30, which was the previous day's low, was 295.20. So I was just a little bit ahead of that. It bounced up to over 296. I sold. Came back down. I tried it again, and I was like, I went real tight stop, and I only lost a dime on the way back through because I was like, I really had a bad feeling about the second time trying. Usually, it's going to take it out. It did. We've kind of been leaking here overnight. So, what does this mean going forward? Is the question. I mean, market is somewhat spooked. This jobs number in 24 minutes is very.
It's going to be, yeah. Yep. And just adding to the impact of that tweet. I mean, so you had, I was totally surprised by the market action yesterday. And I think you were too a little bit because
I didn't think it would get it all back. Just like,
well, I didn't think we would rally that much.
Oh, we rallied the whole thing back.
Yeah.
Entire, and obviously, with the press conference was obviously the issue there. We rallied the whole thing back. So, I don't know. So that was impressive. But I mean, if you were using that opportunity to lighten up, congratulations, because you're immediately rewarded with a tweet from the president.
Yeah.
Right back down to the lows.
Yeah. All right.
Crazy action.
So do you want to talk about Mr. Icon? There's some good earnings?
I want to talk to banks first, because the banks really got smacked around yesterday. That was an awful chart. And we talked about this. The TLT was blasting off in the pre-market. And it obviously continued to blast off after we got the Trump tweet. That continued. You can see the pop on the Trump tweet. But there's an inverse correlation between the banks and the TLT. For some reason, the banks decided to go positive even yesterday, despite TLT trading heavily or despite TLT trading up. So usually the banks move opposite, but they weren't. And Bank of America went up and kissed its high. I mean, high. 3106 from the day before yesterday's high, 3106. Obviously, the tweet comes out a little bit later, but it was already leaking ahead of them. The banks started leaking in the morning, and that's because you were seeing strength in the TLT. So I know a lot of people just say, oh, banks in the market. It's the TLT that dictates some more. TLT is up, banks are going down. TLT is down, banks are going up. That's typically what the trade has been for the last 3-4 years. So when I look at the banks, the first thing I look at if I'm trading them is what is the TLT doing? Like, for example, for today, the TLT is trading higher here right now. That could all change at 8:30. But as of right now, the TLT is higher. Banks are going to be relatively weak. Now we have an overall market that's weak too, so that's pushing them as well. But that Bank of America kissed those highs and just collapsed. And that is a big move, almost a 2-point intraday move for BAC, giving back its entire 2 weeks of gains on one tweet. And not only that, just in literally an hour. Impressive sell-off in Bank of America.
Yeah, I was looking at it. I was looking at that level, and I saw cross 31. I'm like,
full disclosure, I'm short Bank of America.
Okay. And I'm thinking, okay, here's a breakout, man. This thing is finally clearing 31. And then even when the market was still hanging up there at 3,005, 3,010, they started to roll over.
Yeah, the banks were leading it.
Yeah.
TLT, though.
Yep.
That was the main reason why they were leading it.
Yeah.
So question is, where do we go from here? So obviously the jobs number is all it's going to matter for today. I mean, you're going to come out 8:30. Keep an eye on that TLT. If TLT continues to rally, banks are going to show weakness. If TLT reverses, starts to go down, banks are going to rally. So it's going to move opposite to the TLT. So keep an eye on that if you're trading the banks after 8:30. Longer term, I'm not like the banks. I own very little banks in my long-term portfolio. I've always cited the Deutsche Bank factor. I don't know the contagion risk. There's obviously a lot of issues there. Banks have performed okay in the last couple of months, but they've been relative underperformers for a long time. The other thing that we haven't really mentioned too much, it's been in my head for the Canadian banks, but also for the U.S. banks, is what is going on with these oil stocks? And if you think like stocks like WLL, did you see that move yesterday in WLL?
Crushed.
That is just an epic collapse. I think it's $18 the day before. It's $10. I mean, they're just killing these things on earnings. CXO stock was $99 2 days ago, $75 loses 24 points. These are huge, huge moves to the downside. Obviously, USO got hit hard too. But there are some of these companies, and I don't think CXO, but you look at the WLL and you look at the rig and you start thinking, okay, are some of these companies potentially going to not survive? If that is the case, what happens to all the debt? Because there's a pile of debt in almost every oil stock. They are loaded with debt. And if we start to lose a few of these smaller oil players, there's going to be some banks that are going to eat the losses. Because imagine being a bank and all of a sudden you've got, a driller that is out of business. What are you getting for those assets? You're getting, they're going to get 10 cents on the dollar, if that. And it's going to be in an environment that nobody wants, all that oil equipment. So I've got to think that if these oil drillers continue to go down, that is going to put pressure on the banks and Canadian banks as well. Canadian banks haven't been performing that great. They trade with pretty, they trade okay valuations. They hold up. They're a little less risky. But at the same time, you look at a Bank of Nova Scotia, and I do own some Bank of Nova Scotia. It's one of the only ones I do own. I don't know if I should, though, because you start losing some of these oil companies. Some of these banks could really eat some losses. So that's just another wild card there. So when you look at these PEs on some of these banks and you see 7, 8, 9, 10 times, there may be some risk there. I'm not saying it's going to be enough to take them down, but this could be enough to hurt them. And I don't think some of these oil companies are going to survive. That's my opinion. I've been saying it for a while. And that will impact the banks.
Yeah, tons of debt. I mean, that was the contagion back in, what was that, 16, I believe, when oil. I mean, can you imagine if oil goes to $20 now? Can you imagine the carnage and the pain it would inflict on the market? It's a big component of the S&P. We're still $35 away from it. Also, these fracking companies, what happened? Price of oil got too high. Hey, we can go back online. They start pumping it up. More supply, and less demand here. So we'll keep an eye on these. I mean,
maybe they're all going to survive. Maybe we're not going to. We haven't had a major oil bankruptcy yet. I'm just looking at some of these charts, and when you see charts like this, don't you think that, Joe? When you see a chart like WLL, like we don't know the company. I'm not sitting there and analyzing, the balance sheet and looking. I just know they're loaded with debt. But when I see stock charts that look like this, I mean, WLL in 2014 was $370 a share.
I see it.
It's $10. So it's telling you, like, they're not giving much value to the equity. So what does that mean? I mean, first of all, I'm definitely not buying these stocks, but if I think, they potentially, and I'm not saying it's going to happen, I'm saying it could potentially happen. We could start losing some of these companies. We don't know which ones, but you start losing them, that is definitely not good for the banks, because I don't know who holds all the debt, but somebody does, and it's probably a bank.
Right. So we'll keep an eye on them. Since we're talking, oil companies here, I do see XOM, ExxonMobil, one of the few stocks on my screen here that's in the green, up 64 cents.
Leaking big time.
Leaking already?
Leaking big time. Look at the pre-market chart and tell me that this doesn't tell. So, okay, here's why we like pre-market prep and we like, we started the show. You come in here and you say, oh, Exxon's having a pretty good day. It's trading up 1%. Must have been a pretty good report. Bring up the pre-market chart. Bring it up. This thing got up to over $75. It is 73 now. It has given back 3/4 of the gains. I think it's going red. I don't even know the numbers. Give us the numbers, Spencer. But I just look from the chart. I think it's going red. What were the numbers?
Well, they beat EPS 73 cents versus 69 cents. And I'm not seeing sales, but they beat on the EPS number. Let me see if I can find the sales real fast. Revenue also beat 69 billion versus 66 billion. So beating the beat.
People just don't want to own oil stocks. They use that, last half an hour since the report at 7:30 to lighten up. And, even if they're beaten and they're looking good, it's the charts that are ugly. Oil is still ugly. It's still going to go where oil is going. Exxon and Chevron are best of breed. So, these are going to be the survivors. These companies, are not in trouble by any means. So when we're talking, the ones that are in trouble, we're looking at these. So this is a different story. But still, that being said, oil continues to go down. It's not good for these stocks. And people want to get less exposure to oil. So when you see a pop in ExxonMobil at $2 in the pre-market, institutional managers are out there selling.
Fixed stock too.
Why come and buy that at 75? I mean, it's right back up to all that overhead supply. I guess I should have been on it shorting it, but I wasn't really paying. I was doing other things.
That was pretty quick pop.
Right. It's staying up there for a little while. So it was up there. I guess it wasn't 75. Well, how high did it get? Close to 70.
No, it did. Yeah, I'm just looking at initial pop here. 74.60 stands.
Okay, so I'm exaggerating. 74.5. But a couple spikes, you could have got 74.5. And it's leaking now.
I just would keep an eye on unchanged. Dennis talked about, going from, big green to not red yet. We're still up 50 cents. So it's still in the green for now. I would use that close from yesterday. Where were we? 72. Where did we close yesterday? 72. We
I'm the low of the day.
72.46.
I would say 72.26. We are leaking. We've given back 3/4 of the gains. I personally think we're going red. I have no position ExxonMobil, but I think we're going red.
70.63. If we get a nice washout in just two lows under 71, that's a buck 80 away. I know it's a ways away, but if we do go red on the session, take a look out for the just around 71. That seems to be an area where you found buyers 2 days in a row. This is back at the end of May, early June, and then it's Kin. CVX trading up a buck 46. Boy, this held up a hell of a lot better.
Usually it's 8:30.
They're not out yet? Okay.
Spencer, are they out?
No, they're usually at 8:30.
Yeah, I think it's 8:30. So
up
it's
a buck 46
up on ExxonMobil.
Look at this, man. This thing is almost at all-time highs.
Oh, it's been unbelievable. Chevron's been, I don't know why.
What's the difference?
I don't. Well, the big oil, they're structured differently. You're not talking small drillers and stuff. They do everything. But I mean, so you look at the big three are Exxon, Chevron, and Conoco. In my opinion, those are the big three. They've all held up fairly well. Conoco and ExxonMobil have obviously not held up quite as well. Chevron's been unbelievable. I don't know what they're doing, but they're doing everything right. I mean, there is a dividend, 3.89%. So, a lot of these, other companies, are held up because of the nice dividend. ExxonMobil's dividend is 4.78 now, but they've held up really well. That being said, if you get a spike up in that 124, 125 area, I mean, oil's in the gutter. 126 would be awesome to short. So I'm not saying that's going to happen. I'm saying if it spikes up there, it could pull an ExxonMobil. It could be the spike and it could be the subsequent drop. So just keep an eye, and there's opportunities there. And talking about opportunities here, sometimes if you like a company, just get an order out there and wait for it. Look at First Solar yesterday off the earnings report. Bring that one up. We're kind of bouncing all over the place, but bring up First Solar.
Oh,
you see where it went?
Under $59.
Yeah, I actually bought some at 58.5.
No way.
Yeah, I did. And you want to know something? I sat there and it felt like an eternity. And I actually traded a little bit through there, and it was like 57 bid. I'm looking at $1.50 lower. So I'm throwing up a little bit because I had my order just sitting out there. I was like, this thing falls. I was thinking, 10%, I'm going to buy it because I want the stock. And I buy it, and I shook out of it, and I made a little bit of money, but I should have just held on to it. And I second guessed myself, and I should have just held on to it. What you got to do is to stick those orders out there in the investment portfolio, because it's one that I wanted.
That's what I thought you were going to do.
No, and I know, but I use my trading account. So then it pops up a little bit, and then you're like looked at a 57, you're kind of nervous, and you shake out of it. And I literally left like 7 points on the table. So like I said, I made a little bit of money with it, but I could have made way more. I was in the trade for, I think, 30 seconds. And if I would have held the trade for 30 minutes, the thing went all the way back to scratch. So this thing lost $8 yesterday, $9 on the earnings report, and now it's trading in the green. Incredible movement off these earnings reports.
Yeah, First Solar. I just wanted to, just real quick, I know CVX is due to report here. Dennis, you talked about if it did get up to 126, but I just want to alert our traders / investors here that this 125 to me would be the level. I see four highs between 124.69 and 125.25. You split that 125. So if I was long this thing, I'd have an order. I don't think we're going to get another $2. I mean, Chevron can move on that, but I'd keep an eye on 125. S&P's trying to rally here a little bit, folks. Yeah, down 875. I'm sure there's a little trepidation here ahead of the jobs report. I mean, the Fed already knows.
I'm nervous.
Yeah. But we'll see. We got some definitely room on the upside and the downside, and we're just actually the bulls and the bears, at least in the S&P futures here, kind of undecided. We've been hanging out mid-range for quite a while here. Mid-range on the session, I believe, comes in at 29.42. So I'll be keeping an eye of that ahead of the report. Let's talk good earnings. Let's talk about PINs.
Let's talk
APHA. Whew.
APHA. And
this is your stock of the day.
Yeah.
Stocks that I've been dogging the pot stocks for a while, and I've been right for a while, but I'm wrong overnight here. I don't have any positions, but I've sold out my pot stocks, still no positions. But holy cow, I don't know what's going on, but they numbers away and it's up 30%.
APHA sells a lot of pot, apparently. Sales jumped 75% last quarter, quarter over quarter, to 128 million Canadian dollars. That beat the estimate of $97 million, and their sales from recreational pot came in at 18.5 million. That's also a dramatic increase month over month and a beat. So they just sold a lot of stuff. That's it.
It's an incredible move overnight. One of the biggest moves we've seen from the stock. I mean, the stock was kissing the lows of $5 yesterday, and now we're looking at 678. So it's a big pop. Question is, do people use this as an opportunity to lighten up? I think they do. I think you get near 7. I don't think this is going. Maybe not. It's going to be a big day for it. I mean, it's impressive that it's holding on to these gains, for a few hours here now. The whole entire pot sector is going to be up on this. So CGC is trading up 2.5%. Kronos is trading up 3.7%. Aurora Cannabis, which is ACB, is up 6%. You can look at, the ETF Spencer Israel always talks about. It's at 28, up 3.5% here. HEXO is another one. I did play this one off, and I'm already out though. It's up 6%. Big moves here in these stocks. It's going to be a big
$7. Tell me about
it's a big number.
It's all about $7.
Yeah, it is. It really is.
It's the only thing that matters.
It's impressive. I mean, the numbers are very, very impressive. So, maybe it can hold on. Maybe this turns the story around. The story has been just flat out ugly here for a long time in APHA. I don't know if they call it APHA. Some people call it APHA.
What do they call it, Spencer?
It's straight down since April.
I got corrected by the former CEO. Now it's APHA.
He likes APHA.
Yeah.
And it was APHA. In any regard here, stock's up 31%. It's a nice quarter. What's it going to do at 7? And what's it going to do? Can it hold on to the gains? It's an impressive quarter.
Did you say you were corrected by the former CEO?
Yes, Vic Newfield. He was at our conference like a year and a half ago.
Oh, okay. I thought he was in the office.
How did that go down? Talk to us about that. How did that happen? So you said APHA and then he yelled at you or something?
Yes.
Was he really mean about it too?
No, he wasn't mean about it, but he said APHA. He stressed that point. So.
He wants you to get the name right. Get the name right.
Yeah.
I'm just going to reiterate $7 here. This is a big pop. 705 is your pre-market high. I see some levels. Oh man, a couple highs. Dogged 7 here, just below and just above. And it's too bad. One of my buddies was like, I almost his text was, I almost bought this at 950. I'm not in it. Where should I look for it? And I just looked at the chart and I'm saying, man, I did see some daily lows under 5. Didn't quite get there yesterday. I told him to got to 502 one day. Boy, I hope he stuck a bit out there. 502, and then buyers stepped up ahead of the report. But to me, it's all about $7. And what are these? I haven't looked at CGC. Is this getting a little pop off it? Ooh, that's an ugly chart. Oh boy. That's getting a little pop, but man, hard to get excited about that one.
There's so much overhead supply here. These things go 30. Could it get a squeeze to $34, $35? Sure. But you look at it long term. Do I want to be buying these things off this? I don't personally. I still think valuation's an issue for a lot of them, but great quarter from APHA. It's helping the sector. I'm going to be leaving here in a minute. We got a huge jobs number. We're going to preview it. You got tons of earnings reports to talk about here.
Sure.
Square, First Solar,
Pinterest, just so many. Glue Mobile, huge move in Glue this morning. NetApp as well.
I owned that Glue Mobile for a long time, and I've sold out of it. And now I look here, and it's well below where I sold it. And I think, should I rebuy it? Maybe not. Chart doesn't look nearly as nice as it did when I bought it. It's on its way down. I like to buy stuff.
Might as well go to that report. So the Glue Mobile report, 2-cent EPS versus 5-cent estimate. Sales of 95.5 versus $101.6 million. So they were light on both the Q2 numbers. And this is a company that makes those mobile games that everyone gets super into for like a month and forgets about. So this was a hot one a few years ago. I don't know about now.
All right. Anyways, I'm going to trade the jobs number. I'll be hopefully back at you. If it's crazy, I might be a little longer than normal, but I'm going off trade the jobs number.
All right,
All
Joel,
right, go get him, Dennis.
Break down this glue for us.
Oh, this is pretty hard to break down because you had to drop, you had a little bit of a pop here, and you are just hanging out at the lows of the pre-market session. That's down 214. So someone's trying to bring in a short here. We've been making lower lows on the after hours and pre-market chart, but man, there's someone out there at 540, 540, 545, 543, 540. These are all the lows on the 15-minute brackets. And folks, I don't pay much attention to the 15-minute. I try not to look at it too much. But in the pre-market session, I do, because you got people that are positioned to have orders on their desk, positioning themselves for the open. So it's something going on at 540 here. If in fact it takes that out, we'll be looking for a nice round number down at $5. But I don't know. I don't think I'd want to be shorting into the hole here. 540 will be a good level for the remainder of the day here in Glue Mobile. And what game do they have? I don't even know what game they have.
They've got a few. I believe they have like a Kardashian-based game of some kind. I think they're Farm, or either them or Zynga is Farmville. I forget whom, but all those popular mobile games come from Glue Mobile. I think Glue Mobile or Zynga, and they're both getting cracked. So let's go over to Pinterest here. PINS, another big move this morning. This time again, a good report for Pinterest. Q2 adjusted EPS, they lost 6 cents. They were projected to lose 8 cents per share. Sales beat 261 million versus 235 million. So beat, an upgrade to go with it this morning from Deutsche Bank to buy with a $50 price target.
Yeah, and I don't know if Jeremy's listening this morning, but he was looking at this sleepy chart a couple days ago. You had 2, 3, 4 days of matching ranges here, so he threw a little straddle on. I hope he got rid of the put because that put's worth nothing now, but the call is certainly into the money. 33.43 is your pre-market high. You backed off a buck, so what that means is you got to use that as resistance here. Nice pop forward. Wow. Where are we getting into? We haven't been in the 33 handle quite some time here. 32.89 was actually a high. So on May 31st, I'd keep an eye on that. $33, a little resistance here. See if people want to lighten up, after this big jump in, is it Pinterest or Pinterest?
No.
How do you pronounce it again?
It's Pinterest. It's interest with a P attached.
Okay.
So that's it. You want to do one more before we do the number, or you want to start looking at the jobs number? We're 1 minute out from the jobs number. Let's just look into that one. So we are a minute away from this report here. We're looking for a number as I pull it up on my screen: 164 or 165,000 jobs. I've seen both estimates this morning. Remember, 224,000 was the number last month. Looking for unemployment to stay at 3.7%, which essentially record lows or 50-year lows in that. Modest wage increases, but 164 or 165, anywhere around there would be a good number in line with expectations. Joel, what are you seeing in the charts?
Okay, what I'm seeing is that the S&Ps have been very quiet here. Just give me 1 second, and I can wrap this up for you. Okay. All right. So here we are. We're trading at 29.44 and a quarter. We're down 8 sticks on the session. We have a pre-market high of 29.52. The reason that's a relevant number is because it was the exact closing price from yesterday. So there you go. Above 29.52, I think the bulls could get a little bit in control here because it's really thin. You had Wednesday's low at 29.58. Man, it's thin. I was going to say, if we take out the close, it's really thin up to 29.70, and I'm sure the shorts don't want to hear that, but that's the case. We do have.
I think it's an inline number. Inline number 164,000. So 164, 165 around there was the estimate. That was the number for July payroll. So an inline print for jobs.
Are you kidding me? It's already out. What's going on with this market? It's not moving. You
Well,
gotta be. Oh my
when's
gosh!
the last time we got a number this close to the estimates? I think it's been a while. So
Wow. If you want to talk about everything being priced in, this has to be like, I'm just looking at, I'm looking 41, 43 here. This is crickets. Banks aren't, is there, did my internet die? Am I still on here? Can you guys still hear me?
yeah,
This is unbelievable. Nothing. No fireworks at all. I hope Dennis didn't fall asleep during this number here. Mid range on the section 29, 42, 75. All right, we're starting to muster a little bit of a rally here. The Bears couldn't hit it on that. I will say that. I would have kind of liked to see a little whoosh down, take out the pre-market low, but I guess these numbers were already factored into the market pretty well. You did have a slight dip on the 15-minute, but nothing to shake a stick at. Well, how low did we get on that little dip? We got to 29. Whew, nothing. 29, 40 and a quarter. And now we're rebounding 43 and a half. So there's your range. I guess we just move on from this. Unemployment at 3.7%.
Yeah, just going a little bit deeper here. So private payrolls were a little bit light, 148,000 versus 160,000. Manufacturing payrolls very good, 16,000 versus 5,000. So I obviously haven't had time to look into every segment in the report, but in line exactly with the non-farm number, in line with the unemployment number. So they were right on the money this time.
Good. I mean, still very, very low and stable unemployment. I guess the Fed, the Fed had these numbers and doesn't make a difference. I don't know what to say. I can't make anything up here. There's nothing moving, and we'll get Dennis on here in a few minutes. 8:32. So
we also just got Chevron out like just a few seconds ago. So Chevron beat on their EPS and missed. They beat on the EPS. They missed on their sales.
All right, let's go to that. We'll maybe get some action in that. Up 224. So they like it. They like it so far. Trading at the highs of the pre-market session, 122.98 right there, right now. So my 125 area of resistance is not come into play yet, but keep an eye on 123.75. That's your two-day high. Let's see if we can get there. If we do go into reverse, your close from yesterday was down at 120.74. We'll use that. And I don't know what Dennis did to ExxonMobil, though, but 4 cents away. We are now up only 4 cents here in XOM 72.50, relinquishing all those gains that it had in the pre-market. It's leaking. S&Ps are starting to leak here too. The Bulls had an opportunity there. The Bears got a little bit sleepy. We are now under 29.40, trading at 29.38 and a quarter. We are getting a little bit of sustained selling here in the market. Pre-market low comes in at 29.33.50. I kind of like that number because the June 28th low was at 29.30. There's your support here if we come down and make a new low. Unfortunately, folks, if we do take out that 29.30, I am looking, there's a pair of lows here at 29.14 and a half, 29.14.75. Let me see if I can get a target for you all here based on the 9-day average trading range. So a target for the day, 29.20. That's based on the 9-day average trading range. So you want to talk some autos here?
Yeah, let's go grab our guest today, Michelle Krebs, executive analyst at Cox Automotive. Great insights into the space. We'll be right back in a moment with Michelle. All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick, joined now by our guest, as I mentioned, Michelle Krebs, Executive Analyst at Cox Automotive. Michelle, how's it going this morning?
It's great. It's a Friday.
Yes, it is a Friday. Life is always a little better when it's a Friday.
Yes, indeed.
We'll start high level here, and then we'll make our way down into the individual names. But high level thoughts on the autos last quarter. What are their numbers?
In terms of financials or sales?
We'll start with financials, and then we'll go into sales.
Okay. Well, it's been a real mixed bag. The Detroit 3 had a pretty, in particular, this week, General Motors and Fiat Chrysler announced earnings. Both did better than anticipated, and it's all about trucks. Ford had an okay quarter. They announced last week. They are in the midst of major product launches and obviously working on restructuring their businesses, particularly overseas. So I think we'll see improvement from them. So the Detroit automakers did well. We are seeing some caution lights, however. Europeans didn't, or the Asians didn't have particularly good quarters. A lot of it, BMW, for example, they're spending a lot on EVs, and that showed up in the bottom line.
And what about sales?
Sales for the second quarter, and we just did July sales yesterday. Of course, we don't get them all from everybody, but they're strong, a bit off of last year. Retail demand, however, is weakening. And what's really keeping total sales up is higher fleet sales, very high fleet sales from commercial companies, because tax reform gave them some benefits in terms of depreciation, and those are continuing. So it's tax-wise, it's advantageous for commercial companies, small to large, to buy either replace vehicles in their fleet or add to their fleets right now.
And Michelle, as you mentioned, we know it's all about the trucks. We know it's about SUVs. But where are we in that cycle of the truck and SUV cycle?
Still strong. Trucks, it's very competitive right now. General Motors is still rolling out its various configurations of its new truck. Ram has been just gangbusters. The Ram 1500 is outselling the Chevy Silverado right now. And then we're going to see a big battle when the heavy duties from GM come out the second half of this year. And again, that's certainly those truck sales are helped by the tax reform that is giving these commercial buyers some benefit. SUVs, we're a little different story. There are so many of them coming out because everybody shifted their products and their plant capacity on SUVs. We think that market's getting really saturated, and you're going to start seeing more discounting. We saw inventories build up some in the first quarter, and we're seeing incentives increase, and so not everybody's going to be a winner in SUVs.
We're on the line with Michelle Krebs. She's an executive analyst at Cox Automotive. Joins us every couple months to shed some light on the automotive sector. Michelle, you're talking about the pickup trucks helped by the tax reforms and the SUVs, but are we seeing some new life here in small car sales?
Well, really interesting this last one. We have seen the car segments, especially small cars and mid-sized cars, fall over last year. Last year, barely made 30%. There were months we saw it under 30% of all new cars sold, and we've never seen that in history. However, in July, we saw much more interest on our shopping websites, Kelley Blue Book and Auto Trader, in people shopping for small cars. And we saw sales of the Toyota Corolla, the Honda Civic, up double digits. We think that those are budget shoppers. We know there's some serious affordability issues for many buyers. Many buyers are totally locked out of the new car market. But we do think that we're seeing some interest in cars, again, from what we think are budget shoppers.
All right, and talking just individual companies here. I mean, Ford, boy, they're just having a hard time. We look at that, from a technical standpoint, this stock hasn't participated in any of the benefits of this bull market, but electric F-150. Do you think that that's going to help them perhaps take more of the share of the pickup truck market?
Everybody's going to be doing an electric pickup truck. I don't think that's going to be. Electric vehicles are not going to be a huge part of the market going forward.
You keep saying that.
You have to have to look good, and to eventually be ready for the future when they do catch on. But no, I think Ford's will do much better once they are launching the new Explorer now. Their reviews on that have been pretty good. And that's their second biggest volume vehicle. Or let's see, I'm trying to think. They're launching the new Ford Escape in the fall. Those two vehicles are the second highest volume vehicles behind the F series. So that should help them tremendously. And then they've got a bunch of products coming. They got the Bronco. Then there are some other products we know about coming. And then there's a new F-150 coming. So they're going to be in a much better position, at least in the I can't speak to the stock, but in terms of having fresh new products to sell in the next couple of years.
How about, and this is I wouldn't say off topic, but, Ford paid a lot of money on a per square foot basis for the old train station. Big money for that, way above anything that's sold in the Detroit area. And I'm thinking, man, they got to have something good coming out of there, or what they're planning on doing. Can you shed any insight on that? That was a major investment for the company.
They'll be using that when I can't remember the year that it's going to be done, but they're renovating the old Central Station in Corktown, which has a lot of historical significance to the city as well as to Ford Motor Company. They will be using that as their headquarters for autonomous vehicle development. In addition to they have a venture with Argo AI in Pittsburgh, obviously, but and I'm sure that they're going to lease out a lot of that building as well. There's talk about having a retail space at the bottom of it, the lower level, even a movie theater. So it won't all be consumed by Ford. There will be other businesses there as well.
Michelle, any impact down market to the Fed's decision to lower rates?
We don't think it's going to spur automotive sales. What we have seen is interest rates on car loans have not really gone down much. They peaked back in November, and they are only slightly off that peak right now. And we don't see this lowering them much at all. So what it will help is dealers who are paying interest rates on vehicles, floor plans, their wholesales on the in inventory. But no, we don't think it'll spur consumer spending. The cycle has kind of peaked, and we're seeing retail demand lower. We are expecting car sales to come in at about 16.8 million this year and 16.5 million next year.
What about auto debt here? I know that there's, concern. The housing crisis many years ago was a big reason for the financial crisis here. And I'd hear some rumblings about, the debt.
We've been hearing those rumblings for the last 5 years, and it is not the same. There are, yes, auto loan debt has skyrocketed, and much of that is because the price of vehicles has gone way up. The average vehicle costs about $37,000 now, and that has a lot to do with the fact that people are buying trucks and they're buying sport utility vehicles. Ford F-Series average transaction price hit the $50,000 mark last year, and Ram just hit it this last quarter. So, prices are going up, and there aren't as many vehicles to buy on the lower end. Under $30,000 is it's hard to find much to buy. So that's part of the issue. Yes, there's been subprime lending, but when it gets out of control or delinquencies get higher, repos increase, we are seeing lenders pull back. So there's quite a bit of discipline in the system in terms of tightening up credit standards, which we think is happening now. Because there was a big surge in subprime lending late last year. But also there's a ready market for, if a bank takes back a car that someone hasn't made the payments on, there's a ready market for used vehicles. The used vehicle market is pretty hot, and the value is pretty high.
How about used Teslas?
Not like market at all.
I always have to bring up Tesla. I know you've been very I don't want to say cautious. I don't know what the word is. I'm
skeptical. I mean, no.
Skeptical. There you go.
Tesla has been, no company, has built a brand the way that Tesla does. We do a consumer perception study every quarter, and its reputation just keeps going up and up and up. And the Model 3 now is a best-selling luxury vehicle, and so you have to give them a lot of credit. How are they going to make money? When are they going to make money? That's the big question. And are they going to have enough cash to? You've got to freshen your product line. The Tesla S and the Model S and the Model X are pretty dated now. There's still strong demand, but at some point they're going to either have to replace those or freshen those. And they keep talking about an electric pickup truck. We have not seen that. And so far there's we thought maybe they'd get hurt by some of the new competition, but that has not happened. So they're doing great in terms of sales and reputation, not so great on the financial side.
What about, and this is really, really a speculative call here, and you don't have to answer this question if you don't want to, but I mean, wouldn't it make sense for them to do something with one of the big auto companies? I mean, they got $5 billion in cash. I mean, a lot of these companies, I know Ford has a lot of idle facilities. I know that's totally against what Mr. Musk wants to do. But if they really, do you see any synergies between, or who would have the best synergies, do you think, of GM, Ford, and Fiat Chrysler? Or is there just none? I'm just thinking if no synergies. Huh?
And by the way, Ford does not have a lot of excess capacity. General Motors does, but Ford does not. There's been talk about pressuring them to buy one of the GM's idle plants. They're already in one of those out in the old NUMMI plant in California. I don't see that Elon Musk would, want that to happen. There's also been lots of talk about Apple joining with Tesla, but Apple's been picking off Tesla people to work on their autonomous car projects. So I don't know.
Okay, that's a fair answer.
Alienate a lot of companies and people. So who knows?
All right, Michelle Krebs, as we've mentioned, is an executive analyst at Cox Automotive. Great insights as always, Michelle. Thanks for joining us, and have a good weekend.
Thank you.
All right. 8:49 here, Joel. We got 10 minutes and a lot of stocks we have not yet.
Sure. Let's just go rapid fire here, and let's get to what the people want. They want to hear the earnings reports, and they want to hear some potential levels.
All right, NetApp here. Not earnings, but they cut their guidance yesterday after the bell. They were halted beforehand. They cut their preliminary Q1 adjusted EPS number from a range of 78 to 86 cents to a range of 55 to 60 cents. They cut their sales guidance also from a low of $1.3 billion to a low of $1.22 billion. So lowered guidance, never a good headline.
And we gapped down here in May, never really recovered much that gap. And then, you're just hanging out at 57 and change yesterday, la-di-da, nothing going on. And you did make a new low of the move yesterday, but this is after the fact, so you guys don't want to hear that. It's not going to be up at 57 anytime soon. Well, I don't want to say that. Anything can happen in this market. But your initial spike down took you to 45.16, right? Oh, no, that can't be that low. 46.16. I'm sorry. And then you just kind of have a buyer, not super aggressive. He doesn't want to pay up at 48 or 49, but you did come back down to that level. You do have a buyer here in the lower 46 handle. 46.5 was a couple bottoms there, 46.51, 50 cents off that. So kind of looks like, finding some support here on the monthly charts. That's how far you have to go back. You're taking away that low at 52. That could be some potential resistance. And let's see what you got on the monthlies here. 43.91. If you really want to hold out, you don't think that that 46 buyer is going to hold up, you're looking for more, a little bit more on a shorter try, potential long, 43.91. That was your low in November of 2017. And then the other level I want to give you, since you've made the low, we found a seller at 49. So 46 to 49, your early range for NTAP.
Let's go to Square here. This one, I don't know if this report is as bad as the market's making it out to be, but the Q2 EPS 21 cents versus 16-cent estimate. Sales were a little bit light. Adjusted revenue 562 million versus actually that's a beat. Sorry, 562 versus $557 million. So they beat on the EPS, beat on the sales. Their cash app has amazing year-over-year growth. They guided in line with estimates and also in line with previous numbers. So in line on the guidance.
Yeah, what's up with this?
And the cash app, the numbers I saw, their cash app, which is growing like gangbusters, $260 million in total net revenue in the second quarter, growing like crazy. I don't really know why it's down, quite frankly.
Dennis might come on and say, it's just one of those days. It's just not a good day to report. People are not in a good mood. They got shellacked yesterday. Yeah, so it's kind of one of those days that they're finding something into the report right now. We have a step down seller in Square right now. They got their foot on the pedal. You got a little pop up to 75. They are unloading stock here as we speak, sitting on the lows of the pre-market session. Pre-market low comes in at 72.62. You just made that as we speak, trading at 72.90. What can I find for you here, folks? I do see a pair of lows at 72.60, 72.70. So that's kind of where we're pausing. After that, you have a daily low 71.57. But if you're a super bear or you want to try and buy this a little bit more on the cheap, pair of lows at $70 on June 26th and June 27th. So there's your areas of support. For resistance, if somehow the buy the dippers come in here off the open and you get a wild pop up, I'd say I'd be looking at resistance just under $75. Maybe someone that scooped it up in the 72s is trying to scalp it out there, but 72.5 up to 75. But I mean, 75 seems a long ways away, but you never know. You don't know when their conference call is. You know what's going to be happening. But I know Dennis and Jeremy are big fans of this stock. I personally, I've tussled with it a little bit, but never really entertained it for any long-term investing.
All right, we'd be remiss to ignore the Carl Icahn headline from yesterday.
Oh, yeah.
Carl Icahn, and I'm going to borrow or steal this joke from a modest proposal on Twitter. The headline here is that old man yells at a cloud, because that's what happened here. Carl Icahn has taken a stake in Cloudera, a 12.62% stake to be exact, and he is going to potentially seek board seats. He's doing what he does.
Yeah, I mean, it's cheap, I guess. If you're looking on a relative basis, it's near its all-time low. Its all-time low was 489 back in June. You have recovered here. I mean, it's just an ugly chart. I mean, what can you say about this? We have talked about this stock on the show for a while. You got a big old gap to fill up to 852, and that was back on June 5th. You had a close and a low at 852, and then the big washout. So if you're looking to play this, like on a rebound here, and that gap. Another interesting thing about that gap is you had three lows in that area, right, at 850, and then the next day it traded down to 495. I mean, it's just, he's making his claim in the company. A lot of times when you hear these big interventions and stock stuff, a lot of times they get a pop. but a lot of times it's short-lived as well. So it's going to take Uncle Carl a little. He's been really quiet, very, very quiet. I know he took a chunk of Oxy here after that deal, and so did Mr. Buffett. And that stock is not having a good time here either. It's slowly trying to rebound. But Icon, he surely doesn't get the bang for the buck that he used to when, he went at it with Bill Ackman and Herbalife and stuff. So definitely has lost some influence.
Speaking of Herbalife, they reported earnings yesterday.
What a segue.
Yeah, well, nice. After the bell, they reported an EPS miss and a sales miss for the second quarter. Q3 EPS guidance was light. Full year EPS guidance was light. So misses across the board for Herbalife yesterday.
Bill, you should, if you're listening to the show, which I know you do, you should have just held on, man. Let it ride up to 60. 2-for-1 stock split here. We did hit a low, and we are on the rebound. Your low comes in right on the nose at 37 even. So where are we trading at here? We're trading just above that. So keep an eye on the pre-market low. If you're looking for the monthlies for support on this, folks, if you're a longer-term trader, then sit back and wait for, let's see, nothing at 35. The next monthly low doesn't come into 33.76, and that was your monthly low in January of 2018. So few bucks away from there, but that's what the monthly charts are saying. S&P's on the rebound here. Did some work into 29.30 handle. Couldn't get to the pre-market low, right back up at mid-range on the session. So you didn't get a washout off of the report. Come back to mid-range. Let's see the highest we've been since we've had that ho-hum jobs report. And the spike on the jobs report, and really over the last couple brackets here, has been 44.25, 44.5. So that's what the bulls need to get back up there. Test that closing price at 29.52. I gave you a target on the downside, but it would be only fair to give you a target on the upside. And if the bulls can muster some energy here, I got a target not way up, but 29.65. That would 32 handles from that low. But first things first, take out 44.50 and then, 44.50, and then your closing price of 52 even Steven. ExxonMobil, we talked about having some weakness in the stock. They did bring it back down to unchanged, folks. So if you were looking at that, you just had a little low down to 72.25. And your close from yesterday was right in this area as well, the 72.46. So trying to find some support here at the closing price.
A lot of chop in gold. Gold's trading down here. If you're looking at the futures, a little bit different. The GLD is trading down $1 here. Silver's getting hit here too. Banks did sell off a little bit with the TLT rally, but then the TLT started to sell off here too. So TLT is almost flat. So banks are kind of just trading with the market right now, as they're not getting much direction from TLT. You want to see imbalances. Square has 212,000 to sell. It's down 10%. It's ugly. I still have it in the long-term portfolio. I may add to it. Looking at General Electric here, man, this gold stocks, I'm just getting chopped up here. I'm trying to trade gold as the market is really wild here right now. So
all right,
I tried to come back on to talk for 2 minutes, like it fell, and then I'm like, okay, so now I'm losing my train of thought as I'm trying to trade.
That's okay. That's okay.
The markets, but
we forgot about you
right now.
All right. Well, we're into the closing minute here, Dennis, and a wild 2 days on Wall Street here. Pre-market low, I gave you all 29.33. I like that just under that number. Don't get too psyched out if you take that out, because 29.30 was your June 28th low. I'm going to circle that. And we're trying to rebound here. We are at the high since we had the jobs number. I mean, I'm thinking we got to test the close at least once here. The buy the dippers coming on the open. So I'm willing to see what happens at 29.52. And Dennis, your final thoughts for today.
Just again, it's going to be chop. Same thing as yesterday. Going to see a lot of chop here. We're not seeing we're seeing weakness, but we're rallying back. I mean, we just rallied 10 handles from the lows, so it was quiet right in the first 2-3 minutes that jobs number, and then there has been some fireworks. So it has been some interesting trading, which is why obviously I didn't come back because there was a lot of trades to go on here. I'm having a tough feel. It's a tough feel day here right now, trying to figure it out. And it's going to continue to be chopped. So as I was saying yesterday, I think the fade trade is still on. I'm going to say it here again. I think the fade trade's still on. You get a move 10, 15 points in one direction. Don't be chasing those moves. That's my thoughts.
Also, don't forget, President Trump will make an announcement regarding EU trade at 1:45 p.m. Eastern time today. So don't fall asleep like yesterday. Don't get caught off guard by a Trump trade announcement. This one is announced ahead of time, 1:45
right now.
EU trade. We'll get some clarity on that. But that's it for our show today. Thanks to our guest, Michelle Krebs. Thanks to all of you in both of our chapters, both on What's Up.
The market. We just rallied another 5 handles in the last 10 seconds. 6 handles. We're
tweet. Because they're listening to the pre-market show, and I said that you got to test the close, and look at that. Holy macro. All right, we're going to see what happens here at the close, and we'll see if Trump tweeted something positive.
We will see. Please remember, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Catch our podcast, iTunes, SoundCloud, Stitcher. Any questions, comments, concerns, email us.
I can't believe we just went
Benzinga.com, and we're done green. Look at that. What a day.
And I just got stopped out. No big deal. I was going to catch the last one on the way up.
This is incredible volatility right here, right now.
Yep. Right. Okay. I got to go. You got to go. We'll talk to you guys on Monday.
You guys.